Hello investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. We had a very interesting week this week and ended the month with a very big down red candle, as I'll get to in a moment. This is a 1-year daily candle chart of the stock, and I've left my lines on the chart like I do each and every week so you can see how the market played out against what I forecasted last week. And you can see that I did forecast we would come up and then pull back. We did that Monday through Thursday, and then on Friday we broke through that downward leg and came right up to the resistance line that I drew just a couple of weeks before. Now keep in mind, I still believe that we are in a bear market, or at least the beginning of a long bear market, and the highs that we see up at the top are still lower highs. And until we start to see higher highs, this is still going to be considered a down market. Within bear markets, you will often see rallies. We call those bear market rallies. And so what I believe is going to happen next week is I think that we will have enough momentum, at least short-term momentum, to break through this line and go higher. So what I'm going to do is I'm going to erase these former lines because that's already happened, of course, and then what I'll do is I will redraw what I think will happen next week. So let me just get my pencil right there. I'm going to draw a trend line, and I think what we'll see is a break in that support, which is now resistance. This is a role reversal line, so keep an eye on this. I believe that we'll see an increase in volume, and then we'll at least move towards this gap. So I'm still going to keep some of these lines, but this area right here is what I believe is going to happen. I'll label this gap, and I'll leave that up there so you can see next week whether or not we get up to that point. We might even gap up in the process of filling this gap. I don't want to confuse you here. I have videos on the Market Guys website that explain gap trading and role reversal. These concepts are very common. They happen all the time, and we can use those to really profit in the market if we understand how the market moves against these points. Now, if I go to the spiders, to S&P 500, this is the ETF for that, you'll see that I left my lines on again. We pulled back, we bounced right off of this support level right here and came up. Now the interesting thing about the S&P or the spiders here is that this is a very long green candle on higher volume. So that tells us now the short-term buyers are building momentum. Let me remove those lines. They're building momentum, and we've ended January on a down note. But as we begin February, again, there's a good chance that we will rally to move towards filling that gap. Gaps fill about 90% of the time, 80 to 90% of the time actually, and the gaps are across the board. We have them in the diamonds, we have them in the spiders, we have them even in the Qs, and I believe that this will fill. And then once we hit that resistance line right there, which is a gap fill resistance, I think we'll start to pull back from there. Looking at a more broad-based index, which is the Russell 2000 index, you can see that my lines were in place here. I did say that we would pull back. We did Monday through Thursday, and again, once we see this big green candle, that tells us the buyers are motivated. So even with the Russell 2000, which is a more broad-based index, as I mentioned, I think that we can break through that resistance right here and go higher. So keep an eye on that. It does not mean take all of your cash and go into a bull strategy or a long strategy. You might want to participate in a short-term buy for a quick profit, but make sure you place your stops very close to where you bought the stock, because if this market turns down and goes back into its bear trend, you could wind up holding on and losing money. So we don't want to do that. Just be very defensive in this market and move with caution, using protective stops or at least options to protect your position. If I look at the Qs, That's QQQ. That basically represents the Nasdaq market and what's called the power shares. You'll see again my lines were in place. I said that we would pull back. We did that Monday, Tuesday, Wednesday, Thursday right there, and then we broke through that short-term trend on higher volume. So I'm going to remove that line from last week, and I'm going to redraw right here, as I believe we're going to move up to start to fill this gap right here. Once that gap fills, I'll leave that as a target line. And that gap, like the one I mentioned before, will act as resistance, and then we can pull back. Only time will tell whether or not this forecast will be accurate, and I believe it will. And then from there, we adjust our strategies each and every week. Now finally, if I look at the VIX, this is the volatility index for the S&P, you'll see that I said we would pull back, and we have, and then I said we would start to rally. We did not break through resistance, but I think that we have enough momentum in the VIX, because this is a contrarian indicator. I think that the VIX could continue to pull down just like this, and then eventually I think the VIX will bounce. Remember, if the VIX pulls back in the short term, that's bullish for the S&P. If it goes up, it's bearish. But right now, short term, it looks like the VIX is going to come down. We have a red candle right there. We have support that is actually increasing. We have a more or less higher lows, so I think that this low here will be higher than the previous low, and then we could use this as a leading indicator to adjust our positions in the general market. If you'd like to learn more about what I've mentioned so far, just go to themarketguys.com, click on the video tab right there, and it will bring you to a library of short videos that we call market shots that talk about many topics, including what I just mentioned, trading the gap and the role reversal, which is one of the most important videos that you can watch because it's just so accurate. So have a great trading week, and we'll speak with you soon. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.